If we do a 400% move here, we actually have to continue to really go up substantially on this. And it takes us all the way up to basically $5,000 to $6,000. And so again, that's kind of the most bullish case for gold. But I do think it's important to recognize, I mean, you had issues driving gold up in the 70s, you had issues in the 2000s. This one could be one of the biggest ones, which is the kind of the fiat currency demise.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 2nd through September 9th, 2024, while supplies last. First, we have a very limited supply of backdated silver Australian Kookaburra 10-ounce coins at just $3.10 over spot per ounce. Next, 1-ounce backdated platinum maple leaves are just $80 over spot. And finally, we have compelling pricing on various pre-33 American gold coins. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Gareth Soloway from Verified Investing. Gareth, thank you so much for joining us today.
Always a pleasure. Thanks for having me.
Well, it's great to have you today. I did want to discuss the precious metal markets to start off. We've been seeing a little bit of a beating over the last week or so in both gold and silver, but what I'm very happy to see is how well gold seems to be holding up above that $2,500 level, really just dipping below it here and there, but not too dramatically. Your perspective on what we've been seeing in gold recently?
Yeah, and you're right. I mean, we've seen the stock market roll over, we've seen Bitcoin roll over, and gold has stayed sideways right around 2,500. So it's been really, to be honest, very, very impressive. I would say this is that overall, I do think gold is going to head ultimately higher. I have my next price target at $2,660. But it doesn't mean we won't get pullbacks along the way. A couple things that I've been noticing. One is a negative divergence on the RSI, which is relative strength, emerging here. And then also the hedge funds are relatively heavily long. And sometimes, weirdly enough, when the hedge funds get overly long, there's a little unwind that occurs and it can pull gold back. So today we're seeing a little bit of a pullback in gold per the chart, still staying right up in that upper range. But for me, at least, don't be surprised if it pulls back just a little bit, maybe back to this kind of 2,400, 2,380 line before that next leg up. So I would say near term, I'm a little kind of gray area, maybe slightly bearish. Mid to long term, still unbelievably bullish. And I just point this out too, is, one of the things that got me so bullish late last year into this year on gold was that the central banks around the world were just buying hand over fist. And, it's, you don't always want to follow other people, but when it's the people that control the printing presses and the monetary systems and they're doing it, there's a reason and they know what's coming. And I think that's a good thing to remember for investors.
Definitely. And when it comes to your long-term outlook for gold, did you want to share with our viewers kind of the long-term chart and how do you anticipate then gold breaking out of this trading channel that we see on the screen now?
Yes. In fact, one of the ways I found my 2,660 price target was to actually flip to the logarithmic view and then go to the weekly chart and zoom all the way back until we get to the 1970s 79 high. And based on trendline analysis, if we take that high from 1979 and we drag it all the way through here, what we can see is it comes right up to approximately 2660, if I do it as accurately as possible, right up here. And so I think that gives us a late this year, early 2025 price target before it runs into major resistance again. Now, if we want to play that fun game of saying, well, how high could gold ultimately go in this bull cycle? One of the things I love to do is go back and take it back to the regular charting. So we're back to just price being the indicator versus percentage, which is what logarithmic does. And what we can do is if we go back, we can take an estimate of each bull run in gold. And if we go back to the mid 70s, that bull run was about 850%. If we go to the 2000 bull run on gold, that was about 600%. And so what you do is you start to say, okay, it seems like every bull run is, approximately 600 to 800% up. And therefore, we can extrapolate and say, okay, well, let's just take it a conservative. Let's just say instead of 850, this was 620. So the next one, let's say, is 400% from the lows. If we do a 400% move here, we actually have to continue to really go up substantially on this. And it takes us all the way up to basically $5,000 to $6,000. And so again, that's kind of the most bullish case for gold. But I do think it's important to recognize, I mean, you had issues driving gold up in the 70s, you had issues in the 2000s. This one could be one of the biggest ones, which is the kind of the fiat currency demise, which is, these central banks and these governments just running up debt to GDP, ridiculous levels, balance sheets just expanding. I mean, look at what's going on with the Japanese central bank. And so really you could justify a 400+% move in gold, in my opinion, from the lows of this bull cycle beginning.
That's very encouraging for those who are long gold right now. What about silver? I know there's been for quite a while the story behind silver. It's more, the ratio, gold silver ratio is out of whack right now. People are looking at silver also as an industrial metal that's needed, a very crucial metal for industry. So your perspective on where we could be headed there?
Yeah, and silver, there's no doubt that as a technician, when you factor in this industrial side, it makes it a little trickier, right? It's not as pure as saying, oh, well, governments will keep running up debt, therefore silver is going to go up exponentially, because we do have that industrial side. And if I'm correct that we do enter a recession late in 2024, maybe early 2025, then how does that impact that safety trade that gold is purely of versus silver being half and half industrial, half safety hedge? So overall, I still am net bullish over the next couple years in silver, but I think silver will need us to get further into this coming recession, maybe into mid next year, before it really has that next major bull leg to the upside. So right now, again, for me, I'm watching this parallel channel, beautiful parallel channel. We see a pretty big day down here in the silver trade. I would be looking for it to come down into this range here, and I start really accumulating. So we're looking at maybe like a 26.25 down to about 25.50 handle, where there's major technical support. Now, as a technician, what I want to see is okay, it comes into that range. Let's say it comes here. We then buy it. And then it has to deal with this downsloping trend line, but eventually that breaks out. And that's where we get that bigger leg up, where we could potentially see that move back to, let's say, $40, $45, $50. And I know if we go back to the bigger time frame here, if we go back to the highs from 2011, we were right at that $50 range. So I would say once we break out of this downsloping channel, that would be your upside target, which was a fantastic percentage move. But just be aware it's not as easy as gold in terms of just buy it because they're printing money. It's a little bit more complex.
A lot of people have been looking for $50 silver. What kind of time frame do you see silver finally hitting that new high or that high of 50 and going from there?
Yeah, so silver's a little trickier, right? Because we obviously know that it's an industrial metal, and because of that, it's not going to react the same exact way as gold. But one of the things to keep an eye on here, if we look at the chart on silver, we have this downsloping trend line right here. It's actually a beautiful parallel, right? So we're in this parallel consolidation phase on silver. And again, we're seeing a pretty big down day because of the economic data today that came out, the non-farm payrolls. My estimation is that we're probably headed in the near term a little bit lower to this 26, 25, 50 level, right in this vicinity, which is where I will be looking to accumulate a large position in silver. Once we get in here, I think we reattack this channel line here, which is resistance, and eventually break to the upside. So I think by mid next year, the economic stuff should kind of start to fade, where people will start looking and saying, okay, we're in a recession. I think we enter a recession by late 2024, early 2025. But by mid to late next year in 2025, people will already be looking through the recession and saying, okay, things are starting to rev up again. Maybe things won't be so bad. Therefore, silver now demand is going to spike and overtake gold, right? So gold's that safety hedge, the be careful, the economy's collapsing type thing. But once we get through, or at least midway through the recession, then I think silver takes the lead. So I think within a year and a half, you could be looking at a move up on silver to that $50 level.
And as for the stock market, I know the start of September has not been good for the stock market. Your perspective on where that's headed, especially if we do get a recession soon?
Yeah, so unfortunately, the charts on the stock market are not looking good. What we have on the S&P 500 is what we call a classic double top, even possibly what we call an M pattern top, and these are major tops. In fact, we saw something very similar on Bitcoin in 2021, and we know what happened to that. The other side of the coin would be the Nasdaq as well, which has another even nastier pattern formation here, and that would be the head and shoulders. And this is going to be freaky for a lot of people, but we're basically, what I'm doing is I'm extrapolating out a worst case scenario. And a head and shoulders pattern is a bearish top pattern. Here you can see on TradingView, you can literally use the head and shoulders pattern formation tool to mark it out. There's your shoulder, there's your head, there's your shoulder. Now to trigger this pattern, which begins it playing out, you have to crack the neckline, which is all the way down here. So we're not there yet. But if this cracks at around 15,800, look at this. We can do a measured move and figure out the downside target on the NASDAQ of this pattern completion. What we do is we take the highest point of the head, we drop a plumb line right down to that neckline. We take that distance and we do it from the break point, and it gives us a $12,700 target on the NASDAQ. And what's so crazy about that is that, now you're talking about, if this occurs, a drop of about 32% on the NASDAQ. So listen, a lot of things have to kind of come to fruition here in terms of breaking key levels on the charts. But I think we can all see the dominoes are beginning to fall, right? I mean, you had the JOLTS number, less job openings recently. We had the ADP number, very, very weak number. We have the Federal Reserve beginning to panic and talking about two rate cuts coming up, or a 50 basis point rate cut. Actually, twice this year now, the Fed Watch tool is predicting. We had the jobs number this morning that was weak. They revised the last few jobs numbers down tremendously. So everything is pointing to a quick slowdown in the economy. So you can start to say, okay, well, valuations, how do you justify valuations on Apple, on Microsoft, on Nvidia at these levels if the economy's in recession? And you can't. And they have to go back to reasonable valuations, which is more in the 15 to 20 range versus the 30 plus range where they are right now. So there's some really dark clouds out there, Elijah. There really are.
But I did want to maybe stay on the stock market and, our maybe view of where the dollar is as well. During a recession, do we normally see strength in the dollar, and how could that impact things going forward?
Yeah. So during recessions, usually early on when the Fed is getting ready to cut rates, it means easy monetary policy, which means more dollars in the system. Therefore, dollars are worth less. So we have seen the dollar break lower here. And I have this beautiful chart annotated out where we can see we've been stuck in this channel since 2011. And channels are really powerful for technicians because for some reason, there's some sort of subconsciousness in our trading where you can see these lows line up. And then if you stretch a parallel, it's exactly this high, and this high. Well, we had this little upsloping trend line break, which tells me we are likely headed back to the low end of the channel. And you can see how the channel trading works. Low end, we go up to the high, we hit the high, we come back to the low, we go back to the high. So it makes sense. We should fall back to the lows here. And what that tells me is the dollar is likely going to head lower, which makes a lot of sense considering, there's a lot of countries out there that are now saying, hey, we can't be so reliant on one currency like the dollar as well. You add in a more lenient Fed, you add in more debt from the US government. And before you know it, the dollar should go lower. And I do have a downside target of around 95 and change on the Dixie, the DXY, that probably hits by end of year or early next year. So I would predict that the dollar continues to come down based on the technicals of the chart.
And how do you see that impacting the other markets? Obviously, that is often good for gold and maybe not the best for the stock market, but your take on how it might impact the stock market as well.
Yeah, so I think there's periods where, 12 months ago where the weakness in the dollar was cheered because it meant, hey, the economy was so strong and people just begged for rate cuts. Now we're seeing bad news be bad news where the dollar falling is telling us the economy is weak and people are fretting that the Federal Reserve is behind the curve. And so in general, I would definitely say not good for the stock market, but very good for gold. And that kind of goes to that mid to long term projection for me of going to 2660 midterm. And then obviously obviously the dream number is that north of 5,000 level over the next few years. So again, those would be the two sides of the coin. One would be bad for the stock market, the other good for gold. Silver, again, is the mixed bag because it obviously has to do with the industrial strength of the economy partially. And then if you look at things like, you can look at markets like crypto. Crypto's a little trickier. Crypto's still a risk asset, so we have to be cognizant that it probably comes down. But longer term, can Bitcoin grow into a digital dollar? That's yet to be seen.
Now, when it comes to cryptocurrencies, I know you follow those quite a bit. Bitcoin has been taking a bit of a beating over the last couple weeks here. Where is your outlook for that?
Yeah, so you can see very clearly here, we're approaching a key technical support here. Bitcoin having a big down day today, down about 5% right now. So this is going to be a major support to watch, this 52,800. It's the low end of this parallel channel. I am slightly concerned that if we break below this parallel channel, you'll have a little stop at 49,000. But if that gives way, we're probably headed back to the 30 to 40,000 range. So I'm a huge fan of Bitcoin longer term. I really do see the need for it as a digital gold version. But at the same time, investors that are hardcore Bitcoin, they don't understand the connection of the risk asset. And when people get scared, they sell everything. In fact, even during COVID, right, in that 1 month where people were panicking, even gold sold off before it recovered. So it's more about the panic that will force Bitcoin down. Ultimately, I'm going to use it as a buying opportunity, though.
Definitely. And what are some of those buying opportunity price points that you're looking to accumulate from here?
Yeah. So right here is one. I mean, this is a dream level. I don't know if it gets back here. If it does, which I think is possible, if we saw, if you told me the NASDAQ was going to be down 30%, like we talked about in that chart, then easily Bitcoin could be back to 32,000. But you can see this low, and then it broke below, it hit the underbelly, came down, hit the underbelly before breaking out. It would make a lot of sense that Bitcoin, if it fell into this level, would be a huge level. So I would say the low 30s, I would be accumulating pretty heavily on Bitcoin. And when I say heavily, folks, everyone out there watching, just please understand that it's well within the proper allocation of my portfolio. So it's not like an all-in only thing. It would just have its chunk within the portfolio pretty much maxed out.
Now, it's been a while since we also looked at the other precious metals like platinum. There's a bullish case for platinum that it's really at lows right now compared to gold and silver prices. But your take on where we might be heading from here?
Yeah, so platinum's interesting, right? So you're right. These, platinum nor has palladium had the type of runs that you've seen in silver, let alone gold. And so there is kind of a case here. Now those are definitely on the more industrial side, even maybe considered a little bit more so than silver, although maybe not so much. But the key here is platinum needs to hold this zone here. So if this 912 to 885 level, if it breaks below this level, I would be concerned that you could start to move down towards the next support around 775. Overall, do I like platinum longer term? Yes, I really do. But again, we have to follow the charts here. And this is major support. If it breaks, you look for that next downside move, which again takes us down into this area right down here. You can see the sideways chop, this low pivot right over here. I don't think we'd go back to the lows from COVID. I think that was a panicked time, but I do think you could easily retest this in the right economic scenario. If you don't mind me showing palladium, though, palladium's a little bit more intriguing to me. The chart certainly could go lower, but it is stuck in this kind of wedge pattern. If we can break above about 990 to 1,000, there's a lot of upside. Look at how much it's down compared to a silver or a gold, just from where it was trading even in 2020, 2021, and 2022. And so it really does bring up the possibility that there could be a significant breakout. And if that breakout occurs, we could be looking at, quite a bit of upside, 30, 40, 50% upside in palladium.
Fantastic. Well, it will definitely be interesting to continue to track this with you, Gareth. And getting back to where you see gold headed long term, it should be definitely an interesting time in the markets going forward. And if we see a recession, that should shake things up as well. So we do appreciate your time today, Gareth. If our viewers are interested in learning more, where can they find you?
Yeah, thank you so much. It's always great to talk to you. And I love talking about the metals because it certainly is in this day and age. I think metals, you have to have an allocation in the metals to protect yourself. But people can find me at verifiedinvesting.com. I do a YouTube show every day that's broadcast on verifiedinvesting.com. And basically, the idea of verifiedinvesting.com is to open up a lot of the technical know-how and knowledge and data that institutions have to the retail world to give everyone the equal footing and equal shot. So find me there if you guys are interested.
Fantastic. Thank you so much, Gareth, for your time, and God bless.
You too. Thank you.
This is Kaiser Johnson with Liberty in Finance, and these are the Miles Franklin Weekly Specials for September 2nd through September 9th, 2024, while supplies last. First, we have a very limited supply of backdated silver Australian Kookaburra 10-ounce coins at just $3.10 over spot per ounce. Next, 1-ounce backdated platinum maple leaves are just $80 over spot. And finally, we have compelling pricing on various pre-33 American gold coins. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.